Hi, it's Rebecca again, and it's with Evolution Financial Planning, and I'm here with the lovely Poppy Fox from Brooks Macdonald, and she's a wonderful investment director here. And we've just been talking about Mr. Trump. So it's very
everyone's favourite subject.
Oh, Mr. Trump. So what do you think is going to happen now with the midterms?
So we effectively got the results of the midterms today. So I think it's probably worth spending a minute just explaining what the midterms are for those who aren't aware. So effectively, there's elections to both houses in the US, so the House of Representatives and the Senate. And these come every 4 years, but they're usually 2 years after when the president has been elected. So i.e. it's seen as a bit of a bellwether on what the US people think of their current sitting president, so i.e. Trump at this stage in the proceedings. And actually, what has happened? So the Democrats effectively took control of the House of Representatives from the Republicans, and the Republicans maintained control of the Senate. So, i.e., it was a bit of a win-win for both sides. It could have been a lot worse for Trump, in summary, because actually it's often quite hard for a sitting president to maintain the popularity and momentum. But I think we've also got to caveat, despite what we might think about Trump and his tweeting and his views on various things, he's actually relatively popular in the US. And that's something I think, sometimes if you're not US-based, you can sort of forget that.
Misinterpret that.
Yeah, misinterpret that. And actually, what does it mean for markets, the midterm election results? Actually, because we got the sort of consensus, there wasn't a shock to the market. The reaction's been quite muted. And actually, the outcome we don't think is necessarily negative for markets. Hopefully, it still should continue to be positive. Actually, having a sort of almost divided house sometimes works better for stock markets. So I'd say we're still relatively positive on the US.
And US markets are still doing very well in general at the moment. Out of all of the asset market classes, they're doing terribly well.
So the US has had a really strong run, and their economy looks in pretty good shape. So Trump put in quite a few tax breaks earlier this year, which has given them a boost. So actually, things are quite positive. I suppose the counter-argument of that is, did Trump really need to give them a boost when things were actually going well? And whether this leads in due course to the US economy overheating and then at some stage them falling into recession. We think that's a distinct possibility, but I think it's something that, it is on the radar, but probably not something we need to worry about quite now, and perhaps something for further down the line. So we're still relatively positive on the US.
Fabulous. Thank you so much.
Pleasure.